Hi, good morning, everyone, and welcome to the 47th episode of Let's Talk About Market. Uh, in the last few days, we have seen a runaway rally, and apologies, we could not conduct a live session on Monday. That is because many of the teammates were, not in town, so we couldn't do that. But anyways, now we are back. And the good part is that the Nifty index has broken out many important resistance level, and it is more or less moving on the expected lines, and as we had discussed in the past few days. So what next from here on is what we'll try and discuss, and what are the things to look at for, and when is it that what are the steps, now to trail this rally, and how to think about it. Basically, that's what will be the talking point today. So let me share my screen. Someone please confirm if you all are able to hear me properly, and if you all are able to see my screen. Okay. Can someone please confirm if they are able to see my screen properly, and if they are able to hear me properly? Can someone please comment in the chat box so that okay, thanks. So thanks for the confirmation. So yeah, when we look at the Nifty index, basically in the past 3 to 4 days, it has seen a runaway rally. And I had pointed this out that there was a big cup and handle pattern breakout which the Nifty index was seeing on the weekly chart, which was nothing but this. And even the RMI had given a bullish crossover last week only, right? And the good part is that we are seeing a follow-up buying this week, and that is good to see. So of course, this is a truncated week, where we had one moderate session and the other day we had a holiday. So it's a truncated week in that sense, but nevertheless, the pattern is looking very good. Now the Nifty is running back to the all-time high of 26,277. It is like just 200 points away from that level. So that's where, see, now please understand what is happening in the short and the medium term. So in the short term also, you can see that the RMI has given a bullish crossover, and it has been rising higher since then. So there is no major signs of a reversal level or anything of that sort, suggesting any sort of exhaustion in the near term. But on the hourly chart, you will see that there is some sort of divergence that is now forming. Now people who attended the Saturday session of Q&A, they would know how to deal with this, right? I mean, the RMI is giving whipsaws over here. So when the RMI does this, it is better to switch to the trailing reversal as the 20-hour moving average. Now this is from a very very short term perspective, okay? But if you have a slightly more positional view, then ideally, what I would think is the appropriate reversal level will be the 40-hour exponential average. So at some point of time we can get some correction or consolidation, but broadly, these two averages will act as a very strong support level. If the momentum is still very strong, then what might end up just happening is that there can be a pullback towards 20-hour at some point, and then it can continue to rise higher. But if the Nifty index wants to take a breather, then maybe it can be more of a consolidation where eventually the 40-hour gets tested, in which case the RMI also come back to the zero line, and then it gives a crossover. So yes, I mean, the next better opportunity would of course arise when there is a pullback towards the 40-hour exponential average, and somewhere over there we get this kind of setup like we had over here. So that is what would be the patience game, those who have not participated. But I'm sure many of y'all who have attended this, we were anticipating this for quite some time now, and that finally seems to be playing out. So that's where, I mean, the ideal reversal level will be the 40-hour, with which you just need to trail and hold on, and 20-hour will be for the guys, who are very conservative, and they don't want to miss out. So then, ideally 20R can be the reversal level, and then again, when you get those bullish setup, it would make sense to again re-enter. So that is how, I'm thinking about it. And largely, if you see the medium term indicators, which we have been speaking about, of the FI's positioning and so on, we have started seeing some meaningful unwinding, and that has triggered this nice up move as well. I think it is still a long way to go, for, I mean, typically, if you just avoid basically this period, okay, where we had seen some extremes. So over here, if you avoid this, so normally what you would see is that from one extreme, it typically goes to the other extreme, right? So this was the case even in, actually, in election. From here, it went to here. Now, someone can argue that whether is this a range shift or something like that. But for that, we need to have more evidence. But typically, the expectation will be that the short positioning will, at some point of time, the FIs will become net long, and they would rise higher towards the 60,000 mark, which is like an extreme that we have seen in the past. Okay. It's only when it reaches around those kind of level, that's where we'll be a little bit bothered about the medium term trend. But or else, the thinking is very clear that there can be some pullbacks in between, that we'll get from time to time. But, in terms of all the indicators, they should be headed to the other extreme, because they have spent a lot of time being net short, I mean, FIs. This is something, if you see historically, has not happened. At the max, they it would have lasted for couple of weeks or 3-4 weeks, that's about it. But in case of this scenario, they entered the oversold zone, the extreme oversold zone I'm talking about. Okay, in 14th of July, then August, September, October. Okay, it was nearly 3 months they were net short, and I think now they will be forced to cover. And at some point of time, maybe that FOMO might get created, and that might lead to them turning extremely bullish and going to the other extreme. So this, as I mentioned, you can see it in a lot of indicators, right? Even the DI's positioning, which is more of a medium term to long term positioning. So typically, when DIs are long, extreme long, that's where the bottom occurs, right? And this can take again a few weeks to probably few months to play out, right? And this is what we are seeing right now. Even they are at an extreme where, which typically points out towards the market bottom, and this again in turn can lead to good moves on the upside. So that is what the participants data seems to be suggesting. Even if you see the breadth, okay, it's only in the past 2 to 3 days where we have started to see some pickup in the breadth. But even today, if you see, the breadth is not that great. I mean, while Nifty is almost back to almost back to its all time high, but if you see many other indices, okay, let me show you. So this is specifically the small cap index, because that's where the retailers are usually more long. I mean, that is still sometime, I mean, meaningfully away from its all-time high, right? So I think over here also, sooner or later, a catch-up should happen. If you see mid cap, it has been slowly catching up. Sorry, this is mid cap. Okay, it is almost back towards the previous high. And even if you see the all-time high, it is just 2-3% away, unlike small caps. And I think sooner or later, in all these indices, you should get a breakout, and eventually you should see a follow through. So if you see, mid sorry Nifty 500, it has a composition of both small, I mean, all the three, small, mid, and large caps. And that's where, because the large caps have rallied, that's where this has broken out. But I think this is what, if you recall, few days back we were talking about. Because FIs are more short, they will tend to cover, and when FIs come back, usually the large cap do well, and that is what we are seeing right now. But at some point of time, the positiveness in the large cap will rub off, and it will have an impact on mid caps, small caps, and micro caps as well. So that is what I would be looking out for. Okay, and that's where I think the meaningful opportunity now lies in mid and the small caps, and especially small caps, because they are the ones that have not run up. Okay, so again, coming back to the sentiment indicators as well, while we are seeing Nifty almost back to its all-time high, but if you see the breadth, it is still not good. Okay, and that is what is getting reflected also, because we are not seeing that meaningful gains in the stocks, especially in the small mid caps. It is mainly the large caps which seems to have rallied. But as I mentioned, I think we should see this broadening of breadth, and eventually even this breadth should go on the upside. So if you ask me, when is the point when I'll start I'll get a bit concerned, is when the FI's positioning goes to the other extreme. The breadth is very positive, and you have say the OIPCR or something like that. It is going to the other extreme. We know which earlier till 2020 was these levels, around 1.2, 1.3 sort of levels. I mean, if we go over there, and more importantly, if you want to think of a long term top, I know that many people are betting that there is a bubble in US, etc., etc. I mean, I hear all those things, and those are all valid, but in terms of market behavior, we tend to see certain behavior. Okay, so I would want to see this put call ratio volume, which is more of a medium to long term indicator, this coming towards 0.43, 0.45 levels. Okay, that's where I would think that now things are getting out of hand. Okay, which means, because over here, if you notice, small mid caps had topped over here, and from there it had seen a significant correction. Okay, this was in 2021. So this, we need to see it over here, and in such case, I think Nifty might end up being somewhere around 28 to 30,000. That is what we have been talking about for quite some time now. I think once we get over there, and all these indicators go to the extreme, that's where we'll start getting a bit concerned. But I think I had mentioned this earlier as well. These things will eventually play out. It might take some time, it might delay it, but this playbook should play out once again. That is what the expectation is. Now, as I mentioned, I told you that the small mid caps are the one where we have meaningful opportunity, I feel. So that's where in the scanners you can go. Okay, go to the basket, remove this, and go to Nifty small cap 100. Okay, and that's where try to find out the stocks with new buy. Okay, so say Apple is one, which is giving a bullish crossover. IGIL is one. Kajaria is the one that is giving crossovers. I mean, they don't have this ideal setup. Uh, Yeah, so over here, maybe we are not having those ideal setups. But again, what you can do is that on a daily basis, go through this basket. Okay, try to find. You might get a ample of opportunities. Okay, like if I do Nifty 500, there are almost 31. Go through those charts patiently. Okay, go through those one by one, and I'm sure you will be able to see some good opportunities. Like say something like this, where the averages are holding and the RMI is giving crossovers. I've spoken about this in length in Saturday's Q&A session, and how to identify those stocks. Have a look at those stocks, and I'm sure you will find something interesting. Now, coming back to some sectors. So if you remember, I had spoken about the IT sector as well, and I had mentioned this, that we will end up seeing rotation in the market, and this is what seems to be happening right now. If you see IT, it was in a channel. Okay, now that channel has broken on the upside decisively with a very good gap. So I would be very hopeful again for the IT to, in the medium term, uh, and I would expect that it should at least rally 8 to 10% on the upside, and go back to at least this previous high. For this, it needs to sustain above the 40-week average, which is say somewhere around 36,777. So at some point of time when this breaks on the upside, the expectation that it will go towards the previous medium term high, and then eventually move higher that way. Because if you see the monthly chart, it is very good, because it has been holding this 40-month average consistently, and it is trying to make a comeback. So over here, this is one sector I think that should make a good comeback. If you see the PSU banks, they have been inching higher, and I had already spoken about this as well. That the sector looks very good. If you see, it is almost coming back towards the all-time high. If you see Nifty Metal, in the past few days, a very good consolidation has happened over here above the averages. So again, watch out for this sector on the bullish side. Then the other one is Bank Nifty, which is continuing to inch higher, and now it is at a new all-time high. So I was trying to draw some trend lines. So over here, if I draw this longer term trend line on the log chart, that comes to somewhere around 61, 62,000 or something like that. Okay, so that will be this will be again one sector to watch out for. And see, the most important thing that is happening right now is that there has been a bullish crossover, and we are seeing a good follow through of that, and that is a good enough indication that the momentum is back in the market. So watch out for all the sectors where the momentum is picking up. In small cap, we are still not seeing that happening, and that's why it is a bit dull. I think once we see the bullish crossover over here, we might see the momentum picking up. Mid cap is almost on the verge. 500 has already done. IT is in a bullish zone. Auto had moved long back. If you see PSU banks, all of these are in bullish zone. Reality is the one which seems to be turning around. So yes, there are a lot of opportunities that are there. In fact, even FMCG, it is on the verge of giving that bullish crossover. And I had spoken about this, that it is in this broader range, and from that range it is trying to turn around. So this again should be an interesting sector, also because the monthly chart is very good. Because monthly, if you see, it has been sustaining above the 40-month exponential average, and it is trying to turn around from there every time. So that's a good sign. And you can see the series of doji candles which suggest some sort of consolidation. So watch out for these sectors as well. I think if you see the result today, many FMCG companies could be posting result. So I don't know whether they can get re-rated on the upside, or what happens. But again, this could be an interesting sector to watch out for. So mainly, go for the scans. And in fact, see, this we have developed for, because there are various people in the market. So someone might want to see that the stocks which have not rallied, they might want to put the positions. They might want to bet on those stuff. So you can look for the stocks which are percentage away from 52-week low. So the lesser the percentage away from 52-week low, that means the less they have rallied. Okay, this you can do a top down approach, or I can simply go to say Nifty 500 and make it highest to lowest. Instead of that, you can make it lowest to highest, and you can see Tejas Net. All these stocks are the ones that are at 52-week low. You might want to see if there are any suitable setups that are there, or there is some value over there where you might want to hunt. But again, these are the ones which are laggard at this point of time, and the hope would be that as the market turns around, even this turns around. But yes, this is a very easy way to find out such stocks. Okay, percentage away from 52-week low. And the guys who are interested in momentum, right? So they would want to look at the stocks away from 52-week high. So you can see over here, Axis Bank is at a new all-time high, SBI. So over here, sometimes you see and you understand the trend that financials are the ones that are hot favorite right now. Apollo Hospital. Then there are some metal names, Hindalco, and all those guys, Tata Steel. I think they are all just few percentage points away from its all-time high. So that is also another way how you can chase the momentum. So in this case, you can see private bank is at a 52-week high, bank, financials. So entire finance sector, and this is what we have been speaking about as well, right? Fin Nifty, Fin Fin Nifty. If you see, okay, so on the weekly chart, there was a nice support at the 40-week or the lower Bollinger, and from there it is turning around. And again, it is also one index which is at a new all-time high. So, over here also, things are looking good. So there are actually lots of sectors which are now, turning around. The only thing is that you might have to wait patiently for them to turn. I mean, to move, because sometimes it can happen that financials will move up, then they will take a back seat, and IT will move up, then IT will take a back seat, then FMCG might move up. So that way, there will be those moves that may happen in these indices and sectors from time to time, but there might be some consolidation phase in between as well. So okay, so you need to keep those in mind, and try and trade accordingly, and try to find new opportunities through the scanners. There are different scanners that we have given. You might also want to look at the stocks which are cutting above the 200 SMA. So in that case, simply you do over your simple moving average, select all the basket, and you know sorry, I guess I did something wrong. Yeah. So over here, crossing about 200 SMA. So now all these stocks, will be the one which had broken the 200 SMA, and now they are cutting back on the upside. So is there any opportunity over there? So that's how, again, you can try and scan. There are very, very different scans that are available. Just go and explore the scanner. In fact, you might want to see the stocks where the Bollinger Band is widening, and you can probably look at on the weekly chart, because that's where we have gone through a very big consolidation, right? So you might want to see over here on the weekly chart, where is it that the bands have started to broaden. So you can see this adore welding over here, okay, where the bands are widening and it is trying to break above the previous high. Then this is anti-lopus, Apollo tires. Apollo tires also, you can see that there is a consolidation and then a break. So the point is that try and explore this scanner. There are very different scans that you will see. That might you might find it very interesting. Say for example, super trend, which are the ones which are bullish reversals, right? I mean, this week they are giving bullish reversals. So you can simply go to the today's this result over here on 23rd, and you can see that there are lots of stocks where we are getting this bullish crossovers, right? HUL, Infi, and all this. So go to the scanner section, and I would encourage you to scan. I'm sure you will end up getting a lot of interesting ideas that you might have missed it. So create a watch list of that, keep it on your radar, and I'm sure you should be able to find some good setups. So I think that's it from my side. If you'll have any questions, you can throw up. I can try and resolve them, or give you an idea how to think about it. So any questions, please do let me know. And regarding, I think the webinar, we will post it on our YouTube channel. I don't know if it is already posted, but wait, let me check. But if it is not posted, then it should get posted by today. Like Strike Money. If I go over here and I go to videos, so yeah, the Q&A session has already been uploaded, so you can check over here. Okay. There were a lot of interesting questions this time around. So we had a very good detailed discussion on RMI setup also. So you should be able to see it over here. I'm sure you will find it very helpful. So any questions, please let me know. And I think this Saturday we will be doing a webinar on insider trading. I think that was also one of the topic which many of the people had demanded. So we'll be doing a insider trading webinar on Saturday, where I'll be covering how you all can identify the stocks and what to make out of the promoter behavior. So do join us for that on Saturday. But for now, are there any questions? Please let me know. I'll wait for a couple of minutes. If there are no questions, then we can probably end the session. So the question is from where to find the webinar link. So we posted on the Telegram group as well. We also posted on Twitter. So you can follow strike_IC. Okay. I think for this week, we will be putting out today, but over here, like you see, you should be able to get the links. Like this was the for one of the webinar. So just follow us on Strike, and you will be able to see all those links. Okay. So today we will be posting it. So just watch out for the link. Go to the strike_IC, follow us so that you get all those tweets as well, and you will be able to see it on our timeline. And apart from that, we have a WhatsApp group and this one also Telegram group. We also post it over there. You should be able to get those things over there. Suppose for a stock, if weekly RMI is in buy, new buy, and daily gives a new buy signal, this trade will be for how many days on an average? So Vishal, I had mentioned this earlier as well. I'm repeating once again. See, daily, if there is a crossover that is happening, the important thing to note over here is that the crossover should happen below the zero line. Okay. If it is happening above the zero line, means it is a part of that move only. For example, let me trade. So let me zoom in. Trade. Hey, no, sorry. Short term. Oh shit! I've removed the template, I guess. Okay, never mind. Let me just go to the RMI and see. So see, if there are setups like so if we are seeing most of the setups below, now see, this was the one, right? PNB. Now this is not a new buy that you would want to consider. That is because it has not come back to the zero line, and what we are basically seeing is an extension of this move only. Okay. And when the moves are extending, typically the 20 period will not break. Okay. That's the reason that I mentioned that even right now, if you want to trail for the Nifty, because Nifty is in very strong momentum, 20-hour average will be an appropriate one. But for people, who want to stay positionally put in that, 40-hour will make sense. So similarly in PNB, the ideal point was somewhere over here where everything turned bullish, right from bullish crossover, and you would have built some position over here, and finally net long you would be somewhere over here, and from there on it's prudent to just keep trailing. Okay, till the time the 20-hour or the 20-day or the 40-day does not break. Now this depends upon your risk appetite, but for the new one that you would be looking out for, always look out for the ones where there has been an up move and a pullback, and in that pullback it has come back to the zero line, and from there we get a crossover. And typically these crossovers, when happen on the daily chart, it can last between 2 to 3 weeks, or 2 to 4 weeks is broadly what how it can last. If the move is extended, then it can take a lot more time, but typical duration is 2 to 4 weeks. Okay. And similarly for weekly, if there is a crossover, so it can last for 2 to 3 months as well. So if you have 2 to 3 months kind of time horizon, then look out for weekly crossovers. But if you have 2 to 4 weeks kind of time frame, then look out for a daily crossover. Mandar, I just showed you right now on Strike Money. You just subscribe it, you will get all those notification also. And over here, you can see that the Q&A has already been uploaded 4 days ago. So the webinar that we did, the uh, the Q&A is already there. So just go and watch it on the Strike channel. And Vishal, sorry, I just saw the other part of your question. What is the gains that you can look out for? I mean, gains are totally dependent on the market movement. It is very difficult to say, what can be the average gains and so on. But typically, when there is a good crossover that happens, you tend to get a good 2 to 4 weeks kind of move, and that's where you can see it for yourself. How the move has happened. The only thing that you have to try and figure out is that when is it that the trending market will come, because when the sideways market also come, because this is momentum, it will keep going into those cycles. So in the sideways market, the up moves and the bullish and the bearish crossover will be much quicker. But in a positional trending up move, what you might tend to see is that there is a bullish crossover that has happened. After that, the prices are staying above the averages, but we are seeing some whipsaws in RMI. So at that point of time, when you see those whipsaws in RMI, like I showed in PNB also, you don't need to trade those signals, because those are not the ones that will be profitable. The profitable will be the ones where the turnaround is happening, and then it is turnaround is happening from the 0 point. So again, percentage gain, it is very difficult to quantify, because different stocks will have different sort of beta as well. So yeah. Do we have any more questions? Hi, DV. Sorry, I did not get the question. Is Ultratech and DV? Frankly, you have understood the process, and I think uh, I don't want to get into the stock specific discussion. I hope you understand. Anyways, I'll just take one example over here, but I don't want to get into the recommendation part and all. But anyways, Ultratech, I'll try to analyze what is there. So in Ultratech, yeah, there is RMI. Let me just also save the template. Exponential moving average bands. This, let me do it 40. Okay. Yeah. So over here, you can see that the setup is good, which means that there has been an up move, there has been consolidation. There is not a bullish crossover that we have seen over here. So of course, over here we saw that minor uptick and there was a crossover, but it again went down. So in terms of trend wise, this is good, because there is an up move, there is a consolidation. Wait patiently for that bullish crossover or this trend line to break on the upside. I think that's where it will pick up momentum. And just to let people know that once the bullish crossover happens on hourly, typically it can be a good 1 to 3 4 days kind of trade, that you might end up getting. So yeah, watch out for these factors. Okay, but I think in terms of spotting the setup, it is perfect. Up move, consolidation happening. Now wait for the momentum to pick up. Okay, I think that's where we might end up seeing that move on Ultratech Sim. Nifty diffusion indicator of percentage of stock with RMI buy is now at 88. So does this mean to avoid or initiate new buy trades? So yeah, Vishal, absolutely bang on. Good point. Actually, I forgot highlighting this. Actually, if you see the percentage of stocks about 20 SMA, it has gone to 90. Percentage of stock with RMI buy, that has gone to 88. So over here, see, the only one thing that I would want to highlight to you is that yes, while you're right that these are at an extreme, so you might not want to be aggressive, but sometimes you have to understand what is happening in the market as well. So if you see the small caps, it has been very laggard. Okay, so of course, had it been Nifty index, because we have seen such a big move in last so many days, maybe I don't want to touch something over here. Now you also need to understand this percentage of RMI buy is for Nifty 50, right? You have many other indices as well. If you see it for small cap, it is 66. So over here there is still some room left. Percentage of stock with percentage of stock above 20 SMA for Nifty 100, it is still some time away, right? It has not reached to that overbought zone. In fact, even in the mid cap, I don't think it might have reached overbought. So it is 76. So there is still some room left over here. So try to identify the pocket of opportunities where the move has not happened, because I think usually this is the template, right? First, large caps will rally, then mid caps, then small caps, and then micro caps will also come to the picture. So try and identify that way. I think there is still some opportunity left in the small and the mid caps, because these have not seen the kind of move that the Nifty index has seen. And in fact, over here, if I draw the trend line, it has already given a breakout, I think on the Morat day. Okay, now it seems to be just consolidating over here. I think sooner or later, my hope and the expectation will be that this should pick up, because when this picks up, I mean, this is mostly your broad market, right? So when this picks up, that's when you will even see the breadth rising higher, and the 20-day AD ratio, which is still towards that oversold zone, that might start rising higher. So that would be my expectation. So while you're right that for Nifty that might be true, that you need to be a little careful, especially from a very short term perspective. Okay, because at some point of time you might end up getting those dip because of the runaway move that we have seen. But that is not the case for the small and the mid caps, and I think that is where the opportunity may lie, in my view. Is it good choice to take a short trade in Nifty? Or so, Vishal, I would just say this much, that if you're following us, in this live stream, I've always mentioned that go with the trend. Okay, when you try to go against the trend, it is very difficult for you to make money, because when you are in an uptrend, there are two things that can happen. There can be a sideways consolidation or a correction. Now, if at all the correction is happening, you don't know the depth of the correction, right? So that's where you will be caught on the wrong foot over there. And if at all it just ends up being a sideways consolidation, you might just end up giving brokerage to your broker. So rather focus on when those turnaround points happen and move into that. That will be more rewarding trade, frankly. DV, thank you. This clarity is useful. Sure. Thanks. Thanks a lot, DV. Siemens, yes. So yes, Vimal Prakash, you can look at those ideas. I mean, I have given you the broader framework how you can think about it, and which are the crossovers which you need to look into it. Actually, this was on Saturday. There was a big webinar that we did. It was 2.5 hours. That was because the questions were very interesting, and it took a lot of time to address them. Also, I think if you go through that webinar of Saturdays, a lot of clarity might emerge in terms of concept and how to think about it, how to trail it, how to find new opportunities. I would highly recommend you to go and watch that video. I'm sure you will find it very helpful. except few large and many mid small caps. Except few large caps, many mid and small caps have not participated. I would echo that sentiment. That is, and that is what we are seeing in the breadth as well, right? It has not picked up. So I think the opportunity is over there only. Maybe what we might end up seeing is that Nifty index, consolidates, and the small mid caps, they tend to catch up. I mean, that is what the expectation will be. So let's see. I mean, I already mentioned that small caps, in a way, I just noticed it. In fact, I did not notice it, but small caps have just given a breakout from this falling trend line. So that is actually good. I think once we get this bullish crossover over here on the weekly chart, which might happen, either this week or next week, then I think the momentum should pick up. I think that is what the hope is. So let's see. So I think I can't see questions anymore, and it's 11:40 as well. So once again, thanks everyone. Thanks Vishal for your questions. Let's catch up tomorrow and see how it behaves. But I would repeat once again that maybe in the Nifty index we have seen a good move. Good move doesn't mean that you go ahead and short it. Rather, you trail it or wait for the opportunity to arise on the next time. But still, if you see the small and the mid caps, that's where the rally has still not happened, and probably that's where the opportunity will be. So I think in this live stream I have even tried to show you how do you pick up opportunities. You either chase strength, or you either try and chase the stock. I mean, look for the stocks which have been absolute laggard, and where there is a bit of a quality as well. I mean, those are the ones that can also end up giving you some good results. So watch out for this episode if you have not done it. So in between I have spoken about the heat map, about percentage of stocks away from 52-week high and low, and the RMI scanner, and how to specifically scan those stocks. I mean, do those scans. You can do many different scans as I showed you. Like stocks crossing about 20 SMA, 200 SMA today. If you want to chase momentum, you can find stocks breaking about 20 SMA, and so on. It's all up to your imagination, but I'm sure go and spend some time on scanners. I'm sure you will find some very good insights from there, and you might end up getting some very good setups also from there. So so for now, let's end this session over here, and let's catch up tomorrow. And go and explore Strike if you have not done it. And of course, if you haven't subscribed it and you don't have an account, just go and sign up. You will get a 7-day free trial as well. So go and explore it. If you'll have any difficulties, raise a ticket. Someone from our team will call you and will give you a demo. Okay. So once again, thanks for joining, and keep in mind on Saturday we will be doing a webinar on insider trading. So do join us for that as well. There will be a registration link that will be there on our Twitter handle today. So go and register for that as well. Okay. Thanks a lot, and see you tomorrow.